Now, normally, when we talk about the Bank of England, we talk about interest rates. Same with all these central banks. That's the famous thing that they change in order to try and influence what's going on with the economy. This is what happened in recent years to Bank of England interest rates. Look, they were rock bottom through the financial crisis, went down a little bit further, actually, in COVID and after the Brexit referendum. And then they went up to 5.25%, and they've come down recently. So they're at 4%, and the latest decision from the bank is to leave them on hold. But that's not what I want to talk about. Actually, I want to talk about something which is potentially an even bigger deal than this, affects all of us, involves enormous sums of money, might have an impact on Rachel Reeves's budget, but very few people are talking about this, partly because it's really complicated. But I'm going to try my best to just kind of draw you through this, because what we're talking about here is quantitative easing. Now, QE is sometimes, it's a terrible name, I know, but what can you do? QE was this system, this scheme which the Bank of England did, and other central banks around the world, during the financial crisis. Basically, because interest rates were rock bottom, that was down near zero, they decided there must be some other thing we can do to try and push loads of money out into the economy and just get all of the interest rates that the rest of us are paying down. It was a crisis era thing. And so what they did was they ended up electronically creating money, so basically printing money electronically, and then buying up a load of assets. And it's just a way of getting money out there. And it so happens in the bank's case, they mostly bought government bonds, the UK government bonds. They just said, that's the main thing that's out there, so we're going to buy lots of it. And when I say lots of it, it was an incredible amount. It got to the peak, it got to £895 billion. I worked out a few years ago that you were talking about, for that amount, you could buy every property in Scotland. Everything. But instead of spending it on property, they spent it on these government bonds that no one spends much time thinking about outside of the city, and so no one quite noticed it. But it was a big deal. And here's why we need to talk about this now. They've started to sell that off. So gradually, in recent months and years, they have been reducing the balance sheet, selling off those bonds and bringing that down. And here is why this matters. I'm going to give you a little example of one of the bonds that they bought within this program and what happened to it, okay? It's a 2061 bond, okay? Just one of, if you think about them buying thousands and thousands of things with this printed money, this is one of them. And the bank bought it at £101. And look at what happened to the price afterwards, and look at where they sold it. So that's where they sold it, at £28. And, it doesn't take a financial expert to look, 101 over there, 28 over there, that's a big loss. You're buying high and you're selling low, 73% loss. So this is just one of the examples of what's been going on in a nutshell. And if you imagine that extrapolated across this £895 billion, then you have a sense of it. This is kind of giving you a sense. This is across the gilts market, what's been going on and where they were buying. So they bought there, they bought there, they bought there. This was during the financial crisis. That was after the EU referendum. Then they bought again, really very much at the top during COVID. A lot of money, £440 billion at that point. And then here they're selling. And that selling is continuing. And again, look at the chart. You get a sense. These numbers are high. That one's low. The bank is selling at those points. And it's doubly an issue for the Bank of England compared with other central banks. Like I say, other central banks around the world are doing a similar thing. It's just showing you the share of their kind of government bond markets that they've been buying up. Whether it's the Fed, that's the US central bank, that's the purple. The dark blue is the ECB. Here's the key thing. Look at the Bank of England. I'll bring that on in red. You can see they bought a greater proportion of government bonds than the others. And look at that line coming down even more sharply than the others. Now, all of this is going to make sense in a second, but what I'm going to kind of point out is the latest thing that's happening is they've said, look, we're going to slow down the rate at which we're bringing down that line. We're going to slow it down. And so this is just another way of showing that. This is how much they've been selling in recent years, these taller bars, £100 billion a year. The light blue thing is just, those were some corporate bonds. The dark blue bits is the stuff that's maturing anyway. So if you did nothing, it would automatically kind of go off into the market. But these kind of royal blue segments are the active extra sales they've been doing. Like I say, going in there, buying something at 101, selling it at £28 billion. They didn't have to do that. That was an active sale. And what they've said is, instead of keeping this at 100 billion in the next few years, it's going to be 70 billion next year. So some people would look at this and say, well, this is a bit of a concession that what's happened here hasn't gone exactly how we planned and we're kind of reducing the amount. Others would, particularly the bank, would say, well, this was always part of our plan. But have a look at this. This is showing you the total impact of this. And you kind of probably have the idea of this by now. The bank buying a lot of things very expensive, selling it pretty cheap. Every other central bank around the world has been doing something along these lines. But the point is the Bank of England has been doing it in greater quantities. This is showing you how much the Federal Reserve is projected to lose in the coming years as a result of reversing quantitative easing. This is showing you European central banks, so losing 3% of GDP. Look at what the Bank of England is projected to lose in the coming years, 5.4% of GDP. Now, these numbers are really complex. It's very hard to do these sums. You know, these have been done by an analyst at Columbia Threadneedle, and you know there are certainly some question marks people would have over them, particularly at the bank. But even so, the Office of Budget Responsibility says this programme that very few people ever talk about is projected to lose £134 billion worth of taxpayers' money. £134 billion. But like I say, others have different views on it. And actually, I talked just earlier today to the Bank of England governor, and here are the provisos he adds to this.
During quite a long period when we had interest rates down near zero, we had quantitative easing, a lot of benefit was gained from this. It was cheaper to issue government debt and to issue long-term government debt, and the benefits of this will go on for a long time. So those numbers that you quote don't take that into account.
So the point here is to say, listen, even if this was expensive, even if we spent more than many other people that are out there, first of all, it's complicated, and secondly, what would have happened if QE hadn't have happened? Maybe there would have been even more of a crisis. Unemployment would have been higher. So, you know, it's not straightforward. But even so, this is something we all need to be talking about. And I'm going to show you just one other final chart, which perhaps underlines it. OK, this is showing you, there's been so much talk recently, hasn't there, about how high UK government borrowing rates are, gilt yields, particularly the long-dated stuff, so 30-year gilt yields, how high they are in the UK versus other countries around the world. This is showing you the UK, that's the red line, and the US, dark blue line, just from 2017 through to 2022. And you can see, look, the lines are basically more or less in line with each other, aren't they? Then quantitative easing comes to an end. And look at what happens next. Look at the red line versus the blue line. That UK line diverges big time. It diverges big time. And basically, borrowing gets more expensive in the UK after QE comes to an end and it starts selling off these assets. And this is why this is a really big deal, not just for all of us because it affects our pockets, but also for the Chancellor, because right now she's having to contend with, lo and behold, higher interest rates. And so questions are being asked about whether that was the right move. But the final thing I want to mention, sorry, it's been relatively long, but as I say, this is really important, even if it is a bit complicated. What was the other thing that happened at that point when QE came to an end? It was the mini-budget. That was when Liz Truss came along and said, we're going to take things in a different direction, or at least she did for a little bit. And so there's an alternative view that says maybe the divergence of these lines was a bit about the Bank of England, but maybe it was even more about people losing faith in the UK and in its fiscal policy making. So I imagine economists will, for decades to come, be debating the different explanations for this. But all the same, that is the situation we're faced with right now. And that's why when we're thinking about the Bank of England, don't just think about interest rates, think about that techie stuff as well.